Hello and welcome back to the Bitcoin Brew Episode 2. We are here with quite a buzzy week of news from the crypto world. How are you doing, Becca?
Oh, doing okay.
We're going to try to get through this. There's a lot to cover today. Our topics include the Terra Luna crash. We're going to talk about Coinbase bankruptcy rumor on the street. We're also going to talk about the Bitcoin crash, and we're going to have a little piece over Bitcoin Micropayments. So without further ado, let's get into it. Becca, what do you have for us to start with today?
All right. So this week we watched a massive decline in the Terra Luna price and the depegging of the affiliated UST stablecoin. Honestly, this is both very aggravating and terribly sad. A lot of people lost a lot of money. So there are rumors and theories all around this, and it's a very nuanced conversation. So I'm going to consolidate and do my best just to keep it brief. I'm sure that there will be more news, honestly, by the time that we're done talking about this. So what happened was... Let's see. All right, Luna, which is the token associated with the UST algorithmic stablecoin, crashed 98% in a 24-hour period. And UST depegged from $1 to as low as 30 cents, or even possibly lower than that. These tokens are tied to a variety of other market players, including exchanges. So we're really only seeing the beginning of the tidal wave impact. And Binance, which is one of the world's biggest exchanges, even paused withdrawals for their Terra Luna coin, stating that it was slowing down their site and creating congestion. So this is a reminder to everyone, get your coins off of exchanges, because if you don't have your keys, they are not your coins. And we will be talking more about this and the fallout of all of this for months to come.
My goodness. Well, forgive me if I back up a little bit. It's my understanding that a stablecoin is sort of an effort to marry cryptocurrency and the great assets of that into more of a traditional money system that's not as volatile. Is that a fair statement?
Yes, I've never been the biggest fan of stablecoins, but they are kind of a necessary evil at the moment. A few days ago, Secretary Yellen announced that she is hoping for, of course, more regulation around stablecoins. So it'll just be interesting to see what happens with that.
Well, stay tuned. I'm sure we'll be talking about it more in the future.
Yes.
Excellent. Well, I'm coming to you today with another rumor about Coinbase, and they've been having a tough week like the rest of the crypto world. It all started with the trading platform. Let me back up a little bit. The trading platform emerged to help people exchange their funds in a little bit more of a user-friendly way. And according to a Q1 report, Coinbase is custodian to $256 billion of assets. So this is the first time in U.S. history that a crypto exchange has been in the risk of a bankrupt moment of bankruptcy. So what it's doing is it's opening this big can of worms about what is going to be the regulatory questions, the legal questions that are going to ensue. Senior debt holders will get the first dibs on the fallout, and then your general unsecured creditors are going to be the last to recover their money. Coinbase has $2 billion of senior unsecured bonds outstanding, along with the lawyers that they would need to recruit to handle all this bankruptcy trial. That's going to add up quick, which is not going to leave much left for the common folks. So SEC Commissioner Gary Gensler, he's kind of seen the writing on the wall and has been trying to warn the public about such a fallout. And he said, when crypto exchanges fail, you're just in line at the bankruptcy court. So Coinbase's bonds are due in 2028 and 2031. So it's a little down the road. Right now, they're set at 70 cents on the dollar, which that's not bankruptcy level, but it does represent a very high stakes, kind of volatile, what am I trying to say, like market choice, if you will. Brian, last thing I promise, Brian Armstrong, he's the CEO of Coinbase. He took to Twitter to calm everybody's fears and say that bankruptcy is not on their agenda and that everyone's money is safe for now.
Oh, that's good.
What do you think about all this?
Well, it kind of seems like ever since Coinbase went public last year, I believe it was April, that they've really been inundated with issues. Do you think that they'll bounce back? Do you think they'll recover?
That's a great question. My belief is that this will be the true test. If they can overcome this and hopefully kind of start the train for possibly some at least guardrails when it comes to legislation, it could be beneficial for all of the markets that have sort of a similar business model. We'll see.
Interesting. Next, we're going to be talking about why Bitcoin is crashing again. We touched on this last week, but Bitcoin is crashing right along with all other assets due to the Federal Reserve tightening interest rates. And historically, Bitcoin price is only somewhat correlated to traditional markets. However, with recent events along with institutional buy-in, the markets have just been a little bit more closely correlated. And something we need to remember is that when you zoom out and you look at the big picture of Bitcoin and its lifetime value, in May of 2019, Bitcoin was trading around $5,000, and people were very excited about that because it was doing great. Fast forward to July of last year, it was around, well, it hit an all-time high in November of 2021 of $69,000, which is absolutely incredible. So I think Bitcoin is, you know, it does its own thing. Another really important thing to remember is that Bitcoin hash rate is at an all-time high right now, which signals just further belief in Bitcoin as a whole, and more buy-in all the time.
Our final piece tonight is micropayments. I had to do a little bit of research, to be honest, on what micropayments are. They're sort of a small component of a lot of online transactions and even face-to-face interactions. Like imagine, you know, when you go to the donut shop, you just want the bag of donut holes, but they won't let you buy it because it's $5 and you have to have at least $5 to run your credit card. Kind of similar to that, micropayments are small transactions of payments, usually less than $1. In some cases, they're only a fraction of a cent. And what we're seeing is that there's a new opportunity for businesses to use this in the digital marketplace. Businesses can provide low service values to customers without incurring losses. And the concept also affords customers more freedom of choice and reduces barriers to purchasing items. Think about tipping, PayPal, purchasing an app, those sorts of things. So because Bitcoin, let me back up. The early solutions were full of problems because you would have to put in all your information. It was susceptible to being hacked. And then the amount of money that they would have to use to support kind of IT and prevent that from happening really added up quick. But as you know, Bitcoin can be broken down into sats. And so making these micropayments with Bitcoin is a lot less messy. Insert the Lightning Network, which can do these small transactions off-chain, and it makes things a lot easier. So, all that being said, I think this could kind of segue into hopefully a mass adoption because this little piece is going to help a lot of people in the gaming industry. It's going to help people who require subscriptions to their services, and it's a great option. Pay-as-you-go marketing, as I said, gaming will be benefited. So once Bitcoin's volatility kind of calms down a little bit, and
will it ever though?
Great question. I mean, I'd like to think so, yes. Hopefully this will be what triggers a global adoption.
Yeah.
What do you think?
Well, I'm just wondering, do you think that Bitcoin should be priced in sats versus US dollars? Do you think that would help people understand its value?
I definitely do. To me, it's a lot more of a concrete understanding when you see how many sats are $1 versus the Bitcoin. It just gets too, you know, with the decimal point and the small fraction. And I do think that that's going to help it be a lot more understandable and hopefully be just one step closer to that adoption that both of us are hoping for.
All right, well, we made it.
We made it through.
That's a wrap.
I know, right? Sorry for the doom and gloom today, everybody, but we're staying on the positive side. We're staying upbeat about all this. Let's cheers to that, and we'll see you next time.